Good evening, all. Ira Epstein with your SPDR ETF wrap-up for this Wednesday. And we are now at the 2nd of February, 2022. And you know, the interesting thing in the market, we're getting corrections in a number of markets that broke hard back about 50% of what they broke. Many of the markets are going back to their 18-day average of closes, some the combination of the 18 and the 100, and this is where they should have their first problem. In other words, the bounce is nice, but I think you're into the resistance. The ones that were bullish are making runs at their upper Bollinger Band, because there were some that didn't drop as deep as others. Apple's an example coming up. Now in the market tonight, they're taking a beating in the Dow. It's down about 330 points. You're down 43 points in the S&P. Facebook had a big miss, and the market's using that as an excuse to take corrections. Okay, the weighting is there, I understand it, but I still think the market's rallied up in the key resistance in the futures, and I talked about that, and it's on tonight's videos, in fact, and you'll see it. So let's go to these charts and get a feel for where we're at. Rule of thumb, you came from 50 down to, let's call it 42, just for the sake of discussion. That's $8. What's half of that? 4. If you add back 4 to the low, the $46 plus area is about a 50% retracement. Do that, learn to do those things in your head. 66%, the Fibonacci number would be around up here, and it'd be hard to say that it's going to go much beyond that. That's how traders look at markets. You should be able to do this in your head. We have tools where you can just put them, by the way, on the market, and those half and the other percentages that come in there. I only mention it because it's a popular tool. So when I look at the chart, to me the most popular is the swing line. Why? Because it tells me what the trend is. The market's got a pattern of higher lows and higher highs. It's based on the current action versus the prior day on 5 rules. You have a higher high day, a lower low, an inside day, outside day up, outside day down. Pretty simple. And it looks at that and says, okay, if you want to be bullish here, your risk if you're long to not break the pattern of higher lows, higher highs, would be not to take out 44, 45. So it's the first step. Then I filter that by looking at the 18-day average of closes. I teach this all in my charting course, which I'll talk about for a moment at the end of this. The line in the sand, markets like to have a point on a chart, especially chart technicians. Where above a number, they have bullish bias. Below a number, they have bearish bias. It also means when you have bearish bias, when you rally, you're looking for resistance points. Example, you fell down to first the support. Notice the market did stop at the 100-day. And then it went to the 200 and magically found its footing. Okay. Where's the next resistance? Well, overall, it's probably back up at the 18-day average of closes. And that's what the market's doing. So you have an interesting event right now. You have a market that's got higher lows, higher highs. It closed, it settled over 46.86, the 18-day average of closes, giving the upside an upward bias. So bias up, trend up. That's pretty interesting. And here you are in the market with Bollinger Bands. They're far away. I call them not in play. They're too far away on the upside. You need some crazy event for it to hit it. And the same in the downside, unless you're going to fall $3 for no reason in the stock and it doesn't have earnings or anything else coming out to hurt it right now. Momentum is up. So is the market a buy? Well, it is if you say, hey, I want to own the market over 46.86 and I want to risk that amount of money down to 44.44. Some people will do that. I'm a bit more sophisticated because I created it. I say the first time you hit that 18-day average, it's a resistance zone. Don't get all enamored. Let's see if the market over a couple of days can handle that number. And that's the word, handle it. We'll see. When you got up to, and take a look at the 18-day average here, you got down, where did you fight your battle? The combination of the Bollinger Band and the 100-day average. Had you kept going down, I'd look for this. Now, if it goes back up, where do you think I think the resistance is? Right where the market went to installed. The next resistance, I don't show you everything on these charts. My subscribers in the morning, at my 5:30 a.m. when I start recording my morning, we have a window envelope series on it. There's another study. They'd be looking there and seeing the window envelope too. As I look at what this market's doing, if it wants to keep rallying, at least in this simplistic view, the upper Bollinger Band's your next resistance point. That's where you're at. There's a what if. You're already overbought. Any market that has a reading where the slow stochastic's over 70, I say is overbought. And I know you'll say it doesn't matter. To me, it matters because I think that there's a number of algorithms and the like that say, hey, when you get to whatever they define overbought as, they start peeling back. The system's smart enough where it's not, if it's buying less. It's not getting more aggressive. Embed, which you did here, and I think they get aggressive. That's when both numbers are over 80 at least, and I can see that. So I tune my techniques to what I think. The word is think. The algorithm traders are doing by studying them. And that's where I've come up with that idea. So be careful here. As much as this market's up, it's up vertically. It can give you a drop for no reason. Again, the first challenge should be the resistance in XLF. We'll see in the morning if that works or not. It's the first time you hit it. The market, like we just discussed, went bullish again. You'd have to take out 27.59 to go bearish on the chart. I wouldn't be surprised, though, to see a bit of a stall here. It is not overbought, however. Disney is trying to reach up to the upper 18-day average of closes. It's having a great deal of difficulty. The bias is down, the trend is up, and you've worked off, past tense, an oversold condition. So now the market's waiting for whatever the next shoe is going to be as it drops on it. In Facebook, it's getting beat up. The market, the first challenge of the 18-day average, followed through. Earnings day, it's not going to be pretty. You'll get under that 18-day average, in my opinion. Do I know it? I don't know anything. I'm guessing when I wake up in the morning, it'll be under that number. And that's because it's getting hit pretty hard right now. So we'll see what it does. I think it's got to consolidate. That's what I really think is going to happen as a chartist. I see the same thing in XLI. In plain English, as we go through this, guess where I'm keeping my hands on most of these markets? In my pocket, keeping away from the buy or sell part of the chart. I'm bored. I want to do things. I love the idea of when I tell traders go in and out of the market, but I'm not seeing it. These are all rallies back into resistance points that make sense. They're natural points. Some of them are 50% corrections. Back up. People are caught. People that are caught look at a bounce. Do you think they hold on or they try to trim? I think they trim. That's what I think is going to go on here in the semiconductors. In the home builders, you haven't yet taken out this high. You did lose the embedded reading. I'm looking for it to hit the 18-day average. But stiff resistance from there to the 200 and the 100. Plain English, I don't see anything to do. No reason to be short or long. Now, remember I said some markets are bullish and they're making a run at their Bollinger Band. Here you go. It's XLE. What am I telling my clients? Because in the morning subscriber video, which you don't see here on YouTube, I've been telling people, and I have them in these markets on these breaks via a rule. Doesn't mean they followed me, but I know what I say on the video. And these are the type of breaks they buy, and I teach them. Then you want to take money off the table against the upper Bollinger Band, but not the whole position. The whole position when the red line closes under 79. It's a pretty simple way to work with it. In the gold, you went from the upper band to the lower band. There's no way to trade that other than if you were bullish, I would have told traders up here, be peeling out of your position. And when you lost the embedded reading, the whole thing gone right through here. When you lose an embedded reading, I think you're going back to the 18-day average. It all happened in one day, but you're still out of any long positions because you've lost that. And I certainly didn't know that it was going straight down all the way here to the lower band and giving you the bounce back in the market. And that's what it's doing. It's your bounce back. Now, the futures look better than this. So the futures are giving you a better chart formation than this. They're not bullish yet, though. It's just a better looking formation. GDX, I think the pros are telling people you can go short 30.95. Now that you're no longer in oversold territory, both numbers are not under 30 or even one leg of it. 31.89 would be the risk. In other words, hit 31.90, you got to be out. Possibility of 29.21. XME, no. In order to go short this, it's too dangerous. You're oversold. You've now taken out into it the 30. If you look at 40, what was that? 43.60. I'm looking for the resistance at the 18-day average, and that'll break the pattern, and that's what you did, and that's the exact resistance. I'm looking for consolidation. That's exciting. Not just in this chart, so many that are hitting that 18-day average. That break in January, the bottom fell out. You know that, I know that. And now the market's recovered a good part. It's going to, from here, set up the trades. Whether they're bullish or bearish, I don't know. I know the zone I'm looking for that to happen, and this is the zone. Again, 18-day average in the copper. Market now no longer oversold. So if the pros are selling it here at 38.77, where's their risk? Probably 39.30 area, looking for the 100-day average on the downside. TLT has no trend. It's caught in narrowing Bollinger Bands, unlike these other markets that have these wide bands. So you're going to churn in these. BND, AGG, they're all going to churn on it. And here you go with the euro getting itself back up to the neutral territory, the line in the sand. What happens tomorrow in this market? In the morning, the European Central Bank has its monetary policy announcement. Then Ms. Lagarde will come out. She'll hold her press conference. We'll find out what she's thinking, what they're doing. So this big break that I think the pros came out right here. First time you hit a Bollinger Band, you did not hit it here. You missed it by 3 cents. Might have come out of the window envelope. Down there, I think that they're out of a good chunk of their position. If you lose the embedded reading, you got to be out, because I think you're going to the 18-day average, and voila, that's what happened. And that's why I like this charting course. My charting course is going to teach you swing lines. It's going to teach you how to filter the swing line with the moving averages. You're going to learn how to work from there. Come on, baby. With the slow stochastic. Then there's window envelopes, another profit tool. Window envelopes are only a profit-taking area. Bollinger Bands. You got 5 different vehicles. I think you can manage 5 different things. That's all they are. Each builds on each other, and several of them are filters on what the initial trade is. It's 54 videos. It's about 8 hours long. Each video is built so that the way that I teach, don't move to the next video until you understand what you just saw. My secret in college, it took me a long time before I got my grades really good. I went to law school after that. I applied for my master's and so on. It was not turning a page until I understood what was on that page. Prior to that, I went to the library. The pretty girls got my attention. The drinking, I couldn't wait to do that. I was crazy. But then I got it down, and I realized, and it's worked with me all my life, don't turn the page unless you understand what you read. Well, that's what I do here in the videos. Don't go to the next chapter unless you understand that one. Guess what? You won't need a review. You'll have it. That's how I teach. Each one will build on the next for you. So you get charting software. And by the way, in the charting software is the data I use in the videos, because you do a video, it can't be live, so the video's got older data. It's got to have it. If I recorded it today, you're going to have data from yesterday, no matter what I do. But then, included in the charting course, you get my morning subscriber videos. You get the charting software, which is $100 a month thrown in. You get my charting software, the full package, which is $60, and I'll even throw in the morning ETF subscriber video. It's more than half the price of the course, all thrown in for you. So if you're serious about learning, go on our website, take a look. I explain it all in detail under research, www.iraepstein.com. The worst that you've done is you've blown 8 hours. Not so bad. Have a good day.